Hello everyone, it's Davide here and welcome back to Learning Finance. So in today's video guys, I want to talk about Google stock, so Alphabet, because yesterday we had earnings, so it's earnings season and they dropped the bomb. Okay, so today 8.17%, which is incredible for a big company like that, market cap around $1.4 trillion at the moment. And you know that if you have been following my channel, I have always been bullish on Google stock since basically when the pandemic hit back in March. The first video I made about Google was probably when I first started the channel. The stock was around $1,000. So since then, it's up almost 100, no, more than 100%. So I don't know if you have seen that video. Anyway, if you have made some money with Google, I'm happy about that. However, as of today, what's the fair price of the company? Where can the stock go? So in today's video, I want to try to answer to that question, and the only thing I ask you is please an early like. It's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. So here we have guys, Google stock. This is from yesterday, February the 2nd, and we see that they ended the December quarter with a 56.9 billion in revenue, which was driven mainly by search and YouTube. So YouTube has exploded in 2020 as consumers and business activity recovered from earlier in the year. Google Cloud revenue were 13.1 billion for 2020 with significant ongoing momentum, and we remain focused on delivering value across the growth opportunity we see. We see that the total revenues overall for the Q4 quarter year over year went up 23.5% as a total, okay? With the main business which is split between Google services and the cloud. Okay, so we are gonna see that better just in a second. And as we can see from here, for the year, so fiscal year, 182.5 billion in total, 168.6 from services and the cloud, as I said, $13.05 billion. A very interesting thing to see is that during the quarter Q4 that ended in December 2020, they have been able to push the operating margin from 20% the previous year to 28%. So an extremely profitable business. Also the net income is very high, $15.2 billion for the quarter. As we can see from here, we have the division in revenues. Google search and others, 31.9 billion. YouTube ads, look at that guys, this is a 45% increase in 2020. So YouTube has really exploded during the pandemic, as you have probably noticed. A lot of new channels, myself as well, and consider that YouTube was just a startup when first Google bought YouTube, okay? It was in the revenue of other bets of Google, the very small part where Google likes to invest in startups, and then some of them becomes very famous and profitable like YouTube did. Google Network, great as well. So obviously advertising that went down during the pandemic, but then it bounced back very strongly because with all the businesses going online and e-commerce and stuff pushing a lot, physical shops closed, so a lot of businesses they shift their business in the online based, and obviously Google is the major platform to actually publicize and do advertisements about your business. So the business really bounced back very strongly. Then the cloud, look at that, from 2.6 to 3.8 for the quarter. So that's another, how much is the plus than 40%, so 45, again, very positive. Then when we take a look at the balance sheet over there, an incredible thing to look at is that as of December 2020, they had 26.4 billion in cash and cash equivalent. Even more impressive is this, $10.2 billion in marketable securities, which can be basically considered as cash, with a total of cash and cash equivalent of $136.6 billion. Now the question is, what are they gonna do with this money? Okay, so they have the power to do everything they want, new businesses, buying new companies. In my opinion, the only limit, as I said also in the Apple video, is whether regulators and competition stuff, so monopoly rules and stuff, that's the only limit, okay? Because in terms of financial power, they can do literally whatever they want. Now, when we take a look at the balance sheet so we can see more ratios and more details, we have a current ratio for Google of 3.07, meaning that basically it is almost impossible that the company will go bankrupt in the short term. Total assets, total liabilities, the total ratio 3.29, so even better. The debt to equity ratio 13.78%. However, guys, once we account for the cash, which as I told you is 136.6 billion, obviously the net debt to equity ratio is 0. One thing very important and which is entertaining also to watch is to see the short-term debt of Google, which is just 5.58 billion, compared with the total cash and cash equivalents position that they have, and that's the graphic representation of it. Okay, so the green bar, cash, and that's the short-term debt. And if you are curious, that ratio is 24.45, meaning that they can repay the short-term debt up until almost 25 times, okay? So absolutely no financial risk, financial distress at all for Google stock. The market cap is 1 trillion.4, giving us a book to value at the moment of 6.2, which is not that high. Considering with all the growth stocks. Now, in order to do the valuation, the method is the same I've used for Apple and all the stocks. If you want to see the full passages, I've done a video where I also give you the free template to download so you can use it. I'll leave you the link down in the description. Anyway, I have put data, historical data until 2015 to the last one in 2020. And then obviously the most important key here are the averages. Now, averages, which are a net income margin, very profitable business, above 20% in net income, which, however, this average is actually biased by 2017, where they had issues with a fine and then also accounting changes that basically the ratio for the year went down to 11.42%. Okay, so on average it should be very near 21.5. Okay, even though that it's lower because of this. Anyway, the free cash flow to net income, we see that the average is 115.13. However, a more probably intuitive average could be just below 100%, okay? Because if we take outside 2017, which has been a quite crazy year, we are around, in my opinion, 98%. And revenue growth on average 19.53%, which, however, as going on, it will probably decline, okay, as the company becomes bigger and bigger. So for the valuation itself, I have used net margins of around 21.5, as I told you, because I didn't want to consider the skewed result of 2017. And then 98% for the free cash flow to net income. The first two revenues are from analysts' expectations, so 2021, 2022, then the scenario analysis, okay? So for the normal case, I've taken a 15% growth rate until 2025 and then a 9% growth rate. Now, analysts are predicting on average around 16.5%, okay? Anyway, for the normal, I wanted to be more conservative. And that's what we have. Now, the requirements, 8.5% discount rate, perpetual growth, 2.8%. The requirements are the same for all the three scenarios. For the normal case, what we have is today's fair price of $2,125.80 for Google. Bull case, I took 17 until 2025 and then 10% until 2028. Same requirements. The fair price of the stock will be $2,276.50 as of today. And then the bear case. Now, for the bear case, I have considered a 12% growth rate until 2025 and then a 7% until 2028. That will give us today a fair price of $1,895.88. Okay, so that's the bear case. Now, when we go to take a look at probabilities, I have put 50% probability to the normal case scenario, 30% to the bull, and then the bear one, 20% probability. The average fair price will be today $2,125. And however, as I told you, the huge amount of cash and cash equivalents and marketable securities minus the total debt amounts to $106 billion, which we want to include this to the total market cap of the company, and then the adjusted fair price for the stock will be $2,281.77 as of today. Okay, so that's the fair price of the company. With that being said, when we see this huge explosion in price today, well, the reality is that the stock, in my opinion, is still slightly undervalued. Okay, so if you buy Google today, is it all-time high? Is it a nice price to buy? Well, if you like the long term of the company, it is still somehow cheap. Okay, so that's the amazing thing of Google. Really amazing company, amazing business. Now, obviously, when you invest in Google today, this cannot be a 5x company. Okay, so if you want a more smaller company, smaller firm to actually try to do a 5x, Google, I think it's not the case. However, if you are looking for a big company, very interesting, healthy business, in order to do a sort of a percentage of your portfolio when you actually feel safe, well, Google is probably one of the best out there. So I hope you find the video interesting, guys, and leave me a like and leave me a comment below. Tell me, do you own Google stock? Subscribe to the channel, and as always, guys, have a wonderful day.